Happy Monday. New stock alert. We have a stock today that's been crashing. We haven't done much research on this one, but by looking at the charts and just checking out some of the technicals, this thing looks undervalued. Not financial advice, but this thing does look undervalued. UPS, United Parcel Service, year to date currently down 28%. Look at this chart. Currently sitting at about $75 billion valuation, $88.48. Looks like it peaked in 2022. It is currently now, that's crazy, the same price it was selling at in 2013. It looks like it's one of the most undervalued stocks in the market right now. They pay about a 7% dividend. This company isn't the same company it was in 2013. It's a bigger, stronger, faster moving company, but it's selling at the same price. One of the largest couriers in the world. Pulling up the fundamentals real quick, it's actually not looking too bad. They have been posting some flat numbers. Huge hit on the latest cash flows they posted, so we'll go over that today. But anyways, let's start at the top. Total revenue, earnings per share. Latest quarter they posted 21 billion, down 2% year over year. Quarter one was flat. Nothing too major on the difference of total revenue they were posting this year versus last year. The revenue was down slightly to last year, mainly due to the decline in Amazon revenue, which was partially offset by increases in air cargo and revenue per piece. And when we take a look at the international segment, they were affected by the tariffs happening right now. The trade patterns we anticipated played out about as we expected, but the magnitudes were different. And US trade policy changes during the quarter resulted in a 34.8% decline on our China to US lane in May and June. So the tariffs are hitting UPS hard. Partially offsetting this decline in the second quarter, we saw growth of over 20% out of China to the rest of the world. And as you can see on the top line in earnings per share miss, they are being affected by the tariffs happening right now. They are partially offsetting it with other business from other countries around the world. All right, so go down to the cash flows. We have 2 consecutive quarters of negative cash flow growth. I believe this is where investors are kind of staying away from UPS because of the decline in their negative cash flow. We experienced temporary working capital pressure primarily due to changes in tariffs. We expect these will normalize in the second half of the year. They still finished the quarter with strong liquidity and no outstanding commercial paper. They are keeping their dividends. So far, UPS has paid $2.7 billion in dividends. Again, they do expect things will normalize in the second half of the year. But besides the tariffs, one of the biggest thing is the partnership with Amazon, which they are cutting. Why UPS is slashing Amazon shipping volumes by 50%. As Amazon starts to grow their delivery network, UPS is trying to get out with the partnerships, and they are shifting focus to more profitable sectors as Amazon grows its delivery network. And so related to our Amazon volume reduction actions, we are removing approximately $3.5 billion in costs this year while undertaking the largest network reconfiguration in history. So there's going to be a lot of costs moving on in the next year or two as they diversify away from Amazon. Lastly, of course, one of the major things causing the decline in the stock price is they are not providing any forward-looking revenue or operating profit guidance. But on the bright side, we have a little bit of good news. They are planning to pay out around $5.1 billion in dividends still. And we have completed the targeted repurchase of about $1 billion of our shares. So they currently have a share repurchase program happening right now that they just completed. We'll see next quarter if they are going to be announcing another one. We have seen our first insider purchases with UPS. The CEO and one of the directors, Johnson William, both purchasing shares of UPS. So 2 insiders have now purchased UPS at around these prices. Again, it is pretty much selling at the same price it was selling at in 2013. This looks like a huge undervalued company right now. Institutional ownership has stayed pretty flat, but definitely put this on your watch list. Definitely check this one out. UPS is not going anywhere. They are a huge company. They are also still purchasing smaller couriers. Add this to your watch list, guys. Let me know what you guys think. $86, $74 billion valuation. Same price it was selling at 10 years ago. Do you think this is undervalued? Let me know in the comments below. Thanks for watching, and we'll see you on the next one.